Hey guys, so I want to talk about SOFI, and I want to talk about, making some estimates for evaluating the stock. What could it be in a couple years, 3 to 5 years, and just guesstimating some numbers. Okay, so these are going to be some of my base assumptions on the fly. A lot of them are based off analyst estimates and just what management has said for the future. So we split everything in three segments. We'll have the lending segment, the tech segment, and the financial service segment. I'm going to assume from 2024 onwards, we have this large reduction in growth in the lending segment, and that's been discussed in the Q1 report. Just say flat this year, and then we grow, 15 to 20%, nothing big, and we keep a 60% contribution margin, not the gross margin. And in the tech segment, we have a kind of steady, but higher double-digit growth of, I think the management said it was going to be 16, 17%, but we stay at 17 to 20% through 2028, and we keep a 25 to 30% margin average throughout that time. And the financial service segment, which has grown rapidly the last couple of years, slows down quite a bit from 2025 onward, and we go from 75% to 50% to just a 25% CAGR. And this is naturally going to be a lower margin business. So we say maybe 25% is a little too high, but maybe 15 to 20% is more of a reasonable before cost of goods reduction. Okay, so what can hinder this valuation? Well, the less growth we have in the tech segment of this business, we're going to be trading closer to a book value for SoFi, and that's not good because the book value is naturally going to be a more suppressed share price and market cap. So, I mean, the faster growth we have in the tech segment of this business, we can have a higher price to sales or PE, forward PE, whatever metric you want to use, and the business is going to trade more richly. Um, and yeah, so the less revenue growth we have in the tech segment, and the more we go to the finance and lending side of things, we're going to have a significant downward pressure on the stock if the tech segment does not pan out. Okay, so some basic assumptions right now we're around mid $6 a share, market cap sub 7 billion. Um, my assumption didn't really put anything for shares outstanding till 2028. But if we just assume they get to 1.2 billion max in 2028 and they don't have any more equity offerings right now, you can see from 2021 to 2024 we've almost doubled the shares outstanding. That's because of some dilution to raise some cash, and also, SoFi has a pretty big stock-based compensation for their employees. So hopefully, now that they're GAAP profitable, uh, they don't give a crazy amounts of stock and they don't dilute anymore, which I don't think they need to because I think they have $3.5 billion of cash. So I don't necessarily see a reasoning for why you'd want to do more equity offerings. Okay, so we're going to assume based off the forecasting in 2028 they have zero point 0.8 EPS. This seems a little high, but I think management said it was going to be like 0.6 to zero point 0.8. So I went on the higher end of that, and then I went on the lower end of revenue because I think analysts have it around 16 to 17%, but I have it say 15% in 2028, 2025 forward, 15, 60%. And I think that gives us, if I use the right numbers, around the 4.2, $4.3 billion of total revenue across three segments. And if I assume, we have a PE of 20 to 22, that would be around $13 a share. I didn't include the stock base, I didn't include the shares outstanding increase in this calculation, so if we have a 20% increase in shares outstanding, we're going to have a little bit of an increase because they're going to give stock-based compensation every year. This is probably more like maybe $12 a share if they, we have a 20% increase in shares outstanding. So it's probably more like $12 a share with this metric. I think another more simplistic, interesting way of valuing SoFi is with price to sales. You can see I made some price to sales throughout the years. 2021 is kind of ridiculous for a company like this, I think. But I mean, everything in 2021 was really high. So I think throughout 2023 it was average of 4 to 4.5 price to sales. But at the end, it was more. At the end of 2023, it was more of a 3.3 price to sales, I believe. So if we take management for their word, the tech and financial segment are poised together to grow by 50%, and then the lending segment is relatively similar. We get like a 2024 revenue of like $2.5 billion. And if we assume a constant price to sales ratio of 3.3, if you believe that's fair, and I think that's pretty fair, maybe even a little low, in 2026, this would give you, based off the revenue growth guided, 15%. And keep in mind, they always sandbag their guidance. That would give you a market revenue of 3.2 billion with a price to sales of 3.3. Using the same one, the end of 2023, that would give you a market cap of 10.69, which would be a share price of around $10. and that's again assuming it keeps a constant 3.3 price to sales, and we don't have a lot of dilution. So I think the risk reward is okay for SoFi. The biggest risk really is, more dilution, of course, lots of stock-based compensation, and the slowing in growth for the tech segment is really going to hurt the valuation for this company, I think. So I'm just very basic valuations assumptions. I'm getting maybe $10 to $12 a share, just in like 3 years. So that's a 50% plus upside. So I think it's a pretty good risk to reward. So yeah, I own SoFi. I think it could be a good opportunity. Not financial advice, of course.